What's up, guys? Jack, Black Bear Crypto. Today, I just wanted to discuss what's going on in the news and how it's affecting the overall crypto markets. Specifically, I wanted to discuss the Canadian Freedom Convoy and the government's response to that, the rapid hyperinflation that's taking not only the United States economy, but the global economy entirely, the Ukraine-Russia conflict that's currently unfolding, as well as the China Evergrande situation, which is sort of out of the news cycle, but is still significant. By the way, I'm on a Ubuntu Flash right now, so I don't have ad block enabled. So sorry that you guys gotta look at these ads while we're checking out these articles. But let's jump into our first topic here, which is the Freedom Convoy and how the government has responded to it. So the reason that this convoy started is when Canadian truckers blocked borders and bridges in protest of Canada's vaccine mandate for entrance to the United States. Now, obviously, this affects truckers pretty significantly because it's their entire job to travel internationally to deliver their payload. So at this point, it's either get vaccinated or lose your livelihood. So you can see, kind of understand why there would be some pretty widespread uproar to that mandate. So the protests have been deemed illegal under the Emergencies Act invoked by Justin Trudeau for the first time since the law was passed in 1988. So instead of saying, okay, we'll take a rain check on this mandate just to end the convoys, they have cracked down and deemed the convoys illegal. They have gone so far as to freeze the bank accounts of not only the truckers, but anybody who is sending the truckers financial support. And they are attempting to sanction crypto wallets that are tied to the convoy, which if the wallets are part of an exchange, then the exchange may comply with that freezing. They might be able to actually get through and to freeze those funds. But if the wallets are just like a wallet overlay or wallet with where the user has their own seed phrase, there's no way that those wallets can be frozen. So it kind of exposes the ignorance of the Canadian government in asking a wallet provider to freeze the funds. It is technically impossible because the wallet provider is just sort of an overlay of a node, and the actual wallet is specific to the user, and the user holds their own seed phrase. So there's no way that the wallet provider could actually freeze those funds. But again, if your crypto is in an exchange, it's not technically your wallet, it's the exchange's wallet. So the exchange has the power to freeze your wallet, freeze the funds inside of it. So it just goes to show you, again, not your keys, not your crypto. If you're holding the majority of your crypto in an exchange, I would advise you, not your financial advisor, but I would personally get my funds out of that exchange and put them in a Ledger wallet just so they belong to you and you can do with them what you please, rather than having them subjugated to any crackdowns that a government might have or ask in exchange, any court rulings that might ask an exchange to freeze funds for any which reason. So jumping forward to our next topic, let's talk about the inflation that's going on. I talked about this briefly in my previous video, that 80% of all US dollars in existence were printed in the last 22 months. I would laugh at the statistic, but it's actually pretty frightening. Inflation is a form of taxation in a way, you could say. Basically what it's doing is worker wages are stagnating, but the price of goods and services are rising. So I'm lucky enough to have bought this house in December of 2019, right before everything got so crazy. So I'm very fortunate to have had that inflation hedge. If I was looking for a house right now, there's no way that I would be able to get anything close to the value that I got back then. So inflation is not only overtaking the United States, but it is overtaking the world as well. And we can see that going on in China with the real estate market sort of slowly imploding here. Evergrande just had 157 million of their assets frozen by the Chinese government over missed construction payments. So what that means is that Chinese citizens would have put in a deposit with Evergrande, and Evergrande would have promised to build them a home by a specific time. They have failed to deliver on that promise. They have missed the deadline for starting to build the home or have finished building the home. And so it's a real problem that Evergrande is holding these people's deposits, which may have been somebody's life savings. They saved up their entire life just to buy a house or to buy an apartment. And they put in the deposit with Evergrande thinking, oh, they're a big real estate company. They're too big to fail, that sort of thing. And now Evergrande's holding their deposit, refusing to give it back, and also has not delivered on their contract. So that's a big problem going on in China right now. Still an emerging situation. It's been emerging for several months now. I think we first talked about 4 or 5, maybe 6 months ago, when they were initially due to miss their first bond payment. But we'll have to keep monitoring that situation and see how that continues to unfold. And the last topic I want to talk about was the Ukraine-Russia conflict. So Russia basically invaded Ukraine, or eastern Ukraine, and the EU has said they've entered the Ukraine, but they have not called it or labeled it an invasion yet. Because if they label it an invasion, basically it means that the European Union is sort of in a way declaring war on Russia, or saying that Russia is declaring war on the Ukraine. So sort of I guess a political tactic right now. And I don't think that we're going to see much response to this, but if we do, it could affect the markets very significantly. So I would absolutely recommend keeping an eye on again, another emerging situation in the Ukraine, and seeing how far Russia gets in Ukraine, see if they go any further than where they've gone so far. And also keep an eye on NATO's response to it, the European Union's response to it, as well as the U.S. government's response to this, quote unquote, entering. It's an entering, not an invasion yet. So I don't really have an opinion on these topics in particular. I can't really have an opinion on YouTube because, this video could not only get demonetized, but it could get me a strike if I have an opinion on the Canadian government's vaccine mandates or some of these political issues. So I'm not going to say my opinion on them. But if you want to, you can say yours in the comment section below. In fact, I would encourage you to do so. And the last thing I wanted to talk about was just this article about how 16% of Americans say they have never invested in, traded, or used cryptocurrency. Now, that statistic might be skewed a little bit because when the Pew Research Center comes knocking at your door saying, hey, do you have any crypto investments? Some people are going to say no, even if they do, because they don't want anybody to know that they're invested in cryptocurrency. So that statistic might be a little bit off. I'd anticipate that this number is probably maybe 20 to 25% of Americans have never or have ever invested in cryptocurrency, which means that about 75%, about 3/4 of the United States has never invested in crypto, which just goes to show you when people tell you, oh, it's too late to invest in crypto, just how wrong they are. I mean, we've barely cracked the surface with this stuff. I really believe that crypto is the future of finance, and despite all this negative news, despite all the investor uneasiness, I still believe in cryptocurrency long term. If the market takes a dip, if we see crypto go 50, 60% in the tank, I'm just going to continue buying more. Again, my strategy is a conservative strategy to average in over a series of weeks and months into investments rather than pouring everything in all at once. Because if I pour in all at once at the top of a bear market and then the bear market or then the markets crash, then I'm going to feel really bad about it. I'm not going to be tempted to panic sell. I know better than that. But that's something that investors sort of fall into the trap of pretty often, is they sort of put all their money in at once and pull it all out at once. What I do is if I have $1,000 to invest, I might put in $100, $200 in initially, and then in a few weeks, just kind of monitor the price. And then when I see it take a little bit of a dip, when I see it at a good price, buy a little bit more of it. And the same thing goes as the market goes up, I might take a little bit of profits. Now, the majority of my investment, I'd say usually 50 to 60% of what I put into a cryptocurrency, I'm keeping for the long term. But I do sort of try to play the ebbs and flows a little bit to take some profits and earn a little bit of short-term capital. So that's all I want to talk about in today's video. I appreciate you guys tuning in. Leave a like and a comment in the comment section below for the YouTube algorithm. Hit subscribe if you're not already subscribed. Also, ding that notification bell. It really helps get this content to you. Most people notice the notifications on their YouTube, but they don't really notice subscriptions anymore. So I definitely encourage you to hit that notification bell to keep up to date. I'll try to keep up to date on this channel with any of this market news, but any other videos that I have coming out, make sure you ding that notification bell so you're aware of those as well. So that's all I want to talk about. Hope you guys have a good rest of your day. Take it easy.